We have now gotten word that the president has signed the bill that would either force the sale of or outright ban TikTok in the United States. So I want to go through in this video and discuss a little bit about the effects that this could have on businesses like Alibaba, as well as a number of very large companies throughout the United States. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. As I mentioned in the intro, President Biden has now signed the bill that would force parent company ByteDance to sell off their US arm of TikTok. This ban could take up to 12 months to actually implement, but ByteDance, a Chinese-based company who owns TikTok, is vowing to fight this new law in courts. And TikTok has actually seen some success on fighting back against these laws in Montana, where a federal judge actually blocked a ban on the social media app. However, this new law has a lot of bipartisan support. A senator is quoted saying, "The idea that we would give the Communist Party this much of a propaganda tool, as well as the ability to scrape 170 million Americans' personal data, is a national security risk." What's also interesting is a number of other companies have actually came out and implemented either partial or full bans of the social media app. This includes India and Canada. Even mainland China has banned TikTok, but this is mainly due to the fact that the app does not comply with very strict censorship rules within the country. And TikTok has also ceased their operations in Hong Kong after national security laws took effect in the area. There's still some questions about how effective this new ban will actually be. It will ultimately stop Google and Apple from offering it on their app store. However, it will probably not prevent existing users from accessing the app. It will also likely prevent businesses from advertising on TikTok, as well as users who make money from TikTok will no longer be able to get paid from the app. The real question is, what businesses are at risk from bad relations between the US and China? There are a number of very large US companies that would be affected by a bad relationship between the US and China. These include companies like Apple, who have a lot of their production over in China, Meta, considering 10% of Meta's advertising revenue last quarter actually came from Chinese discount retailers, and Amazon, as about half of their e-commerce third-party partners are from China. So if we were to see some retaliation from China against the US, that could have a negative impact on these companies as well as their stock prices. We also see China accounting for a large portion of revenue for companies like Apple and Tesla, as 19% and 22% of these respective companies' global revenue comes from this country. And even companies like Oracle, as TikTok's data storage provider, is bringing in about $1 billion of revenue from the social media company. The ban itself may not have a direct effect on these companies' stock prices. However, if we see this evolve into something larger, as disputes could potentially come up between the US and China, this could have a broader effect on the overall stock market. And we got a glimpse of how dependent these two countries are on each other back in 2018 when the trade war was going on. SPY, which represents the S&P 500, went from $292 all the way down to $240 in the span of just a few months. This was a very quick drop of about 18%. And one of the companies that could be hurt the most is Alibaba. They went through a lot of concerns over the last 3 to 4 years about the potential delisting of their stock from the New York Stock Exchange. This concern eventually fell to the wayside as China allowed US auditors into the country to look at the company's books, but not without first sending the stock down by over 60%. One thing I'll be looking to see is if there's any mention of this in Alibaba's upcoming earnings on May 16th. I don't expect that there will be, but I think it would be very interesting if there are comments about the relationship between the US and China and the effects that this could have on Alibaba's business. Overall, I don't think this will have a major effect on the stock market, but I think it's something to pay attention to because both of these countries are very dependent on each other, and they saw that back in 2018. However, I do think in the short term, it could create a little bit of unease between both sides, as well as a number of different companies in the US and China. But personally, I wouldn't mind seeing a little bit of a pullback in the market. We're seeing a lot of strength right now, and I think that there would be a good opportunity to get into a number of very good companies if we saw a little bit of turmoil in the market that would send it down around 10 to 15%. That would be very interesting and allow me to build out some positions a little bit further, especially after the good earnings reports that we have seen in in the last week. A lot of these companies are very interesting right now. However, they're trading at very high valuations. So I'm holding off a little bit to see what happens in the short term, if there's anything that will send these stocks down that's not fundamentally going to be a problem into the future. But with all of that said, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, why did the chicken cross the playground? Check the comments down below for the answer. Thanks for watching.